Good morning, traders. It is Tuesday, the 8th of September 2015, 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Not much on the news front today. Don't want to spend much time on this. Yesterday's China. Let me turn down my news feed here. It's very loud. Yesterday's China National Development and Reform Commission released a report saying that the economy is improving, stabilizing, power use is up, and exports are improving. Sees China as able to achieve annual economic growth target. This caused a pop-up on the holiday markets here in the U.S. Small rally, and it's held so far. And then on top of that, last night there was unconfirmed talk of a state intervention again in China, which caused the rally in the Shanghai Composite to finish up 2.91%. The Nikkei closed lower by 2.4%. That's pretty much what's driving this action so far. Looking at what's ahead today in economic releases, at 2 p.m. Central, 3 Eastern, we have July's U.S. consumer credit, 18.6 expected. Let me correct the sound. Let's raise the sound a little bit. So, let's see. Yeah, consumer credit, U.S. consumer credit expected at 2 o'clock p.m. Central. Expecting 18.6 billion. Other than that, we have Fed Speaker Kosher Lakota on monetary policy at 4:15 Central. 4:15 Central, and that's it for today. Let's have a look at the economic picture, at the charts, technical picture. Hello. One second. Running into some technical issues here. All right. This is not going well. Okay. So, you should be seeing my screen at this point. Double check. Looks like everything's okay on the sound front. Let's see. Test. How about now? Should be much louder. Sorry about that. It's a new setup, and I guess I was very silent. Should be nice and clear now. Let's move on. All right. So looking at the action last week. When we zoom into the profile, we see that we had our gap down. The expectation was for the market to have its pullback and then to continue lower, 27.75 being the target. And it has not done so yet. I'm kind of starting to abandon that idea. It seems like it's a little optimistic. So for now, with this bounce, what we have is a market that's already cut through this LVN. So we've moved from this 3-day balance, and we have dropped into this 3-day balance last week, and now we're trading above the breaking point, the cutoff point in between, which is at 1941. If you recall last week, the number is 1951, and now we're above that. The target now becomes 1979 quarter. The expectation is as long as it holds this 1941 area today, it's likely to pull back and start moving up to 1979. Last time it got pretty close. It got to about 72 or 73 or so, and then it turned down on Friday on the miss on the non-farm payrolls. That's the big picture. We're pretty much stuck in a zone here that we've put in on the China correction, and we're still struggling with this. Investors are still cautious, not knowing what to expect, but clearly China is trying to put out as much good news as possible. The market's still tentative, though. On Friday, we opened in a gap. On Friday, the expectation is for responsive buying early. Which we got. We hit our target on the dot, and then we rotated down, which was the expectation. The expectation is for responsive buying, and then a push lower below 16, and it ended up taking out the 16 low, which was this 16 and a half, 16 quarter low. It did that fairly early, being that it was non-farm payrolls Friday. The expectation was that it was likely to go dead. We did continue to see a lot of action. If you look at these swings, very wavy. You could see these strong waves all the way down and all the way up. This is a market that's thoroughly auctioning this range here. The market moved down to 1908. Where we saw a pretty decent taper and a rally back up to the almost to the IB high. We essentially had another neutral day. We broke the high right up here. We broke the high to go neutral, and we broke the low to go. We broke the high early, and then we broke the low to go neutral. So we've had several neutral days in a row, with the market finishing in the middle on Friday. This is not a neutral extreme. It did have a nice recovery, but it ended up closing right at value. So this is a market that's on standby, and of course, being that we had the holiday weekend, we kind of expect that. So this is where we left off on Friday. If we look at that on the big picture, very clear balance, broke higher, and then on Friday on non-farm payrolls broke lower, and now we're back up and are trading this profile. So this is your template day here. This is the day to pay attention to. You have your point of control at 51 still open, naked point of control. You have the cutoff at 41, right in here. This is the over-under line, or the composite LVN, and so the expectation for today is responsive selling down towards that 1941. If it holds, I expect it to push through and into 1979 and a quarter. That's the primary target. That's the primary hypothesis for today. If it does not, if it opens somewhere in this range, it's trading 1954 right now. If it does get responsive, makes an attempt higher, and then the rotations down are bigger, and it breaks through the 1941, comes back and holds the 1941, then the target becomes this point of control. We're basically re-auctioning Friday's range, and what you end up with is essentially a type of head and shoulder formation with a neckline down at Friday's low, and so you can project the target for that head and shoulder way down, 73 to 07 or so, and then project that down. That would be the target on the downside, with 1894 being the key target, and then that puts the play of 1831 low retest back on deck, and it puts 1827.75 as the key composite target below. I'm not expecting that. I am expecting it to be responsive, but I'm expecting it to get support and to start pushing up this morning. But if it doesn't, the better trade, the quicker trade, is for it to fail and to move back into yesterday's range and break through yesterday's range to the downside. That'll get things going. But for now, we have to take it as we see it. And the way it's shaping up is we're opening right in the value area and the point of control of last Thursday. So I expect it to be a turbulent open with some responsive selling, since the last auction is down here, some responsive selling, and then I'm looking for buyers to step in to take this up. I hope that's clear. If we look at the overnight to see what types of action we got there, you can see a pretty strong rally here. And at 49, you get this LVN at 49, and it's pretty thin below. If it gets through 49 this morning and doesn't find any bids below, and especially in the 47, 45 area, it's likely to walk all the way down to this. So as I'm looking for that responsive selling this morning as a first move, as the first move after the open, I'm really paying close attention to what it does in this range here. If it cannot find any support here, expect the 41 to go, and expect this to push down into the 1919 or the 1921 actually point of control. This point of control here, the day session point of control, expect that to push through, chop, 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 and then I expect it to start working its way through down to the 1907.75 again, Friday's low. That's all I had for you. The only other thing I wanted to point out is that it's a pretty light week on the calendar. The key thing to note is that official rollovers at 8:30 a.m. Central on Thursday. That's when I'll roll to December on the index futures. Treasuries have already rolled to December last week. So if you're looking at treasuries, you should be looking at the December contract. If you're looking at indices, U.S. indices, you're looking at September until Thursday, Friday, where you switch to December. I switch automatically to December on Thursday. I just go with the official roll as opposed to switching when the volume does. Other than that, tomorrow we have JOLTS job openings, New Zealand rate, and China CPI tomorrow evening. Thursday, we have initial claims, wholesale inventories, crude oil, Bank of England rate decision. And then Friday, we have German CPI, US PPI, Michigan sentiment prelim, monthly budget statement. And then there's a 2-day ECOFIN conference in Luxembourg that starts on Friday that we expect a lot of G20 or G8 or whatever comments on the global economy based on that. So the week is kind of quiet until about Thursday, Friday, and then things might pick up again. That's all I have for you for today. Good luck, and I'll catch you tomorrow.